Good morning, this is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia follow Wall Street lower on renewed concerns over tech valuations. Traders now turn their attention to today's US inflation data. The Bank of England, meanwhile, is set to resume rate cuts, with the ECB expected to hold. We will set you up for Decision Day. Plus, big oil gets its first female CEO as BP appoints Woodside's Meg O'Neill. Let's get to the markets then. European futures flat, stuck in something of a rut. European equity markets, yes, as we lead up, of course, to the holiday season and thinner volumes, lower liquidity. Nonetheless, it is an equity space that seems to be looking for that direction and the next catalyst. Will it come from the ECB? Possibly not. We'll see. The ECB expected to hold, as we said in the headlines. FTSE 100 futures in focus. There was a rally yesterday in terms of UK stocks on the back of expectations of deeper and faster rate cuts from the BOE. The BOE is fully expected to cut today by 25 basis points. What is the direction of travel, though, into 2026? And how will the members split in terms of their views? FTSE 100 futures now pointing lower by 0.1%. S&P E-minis, after a sharp drop yesterday to below its 50-day moving average, dropping around 1% by the close, currently pointing higher by just 0.1%. Nasdaq 100 futures currently pointed to gains of 86 points, but in the context that this index closed lower by close to 2% by the end of Wednesday, with tech as the sector the biggest drag. You look to the names of Nvidia, Oracle, Broadcom in terms of the pressure coming through on the tech story around that valuation question. Let's flip the board and have a look cross-asset then. In terms of the focus, of course, on the pound as we lead up to the BOE's decision, and gilts, of course, when they start trading at 8 a.m. UK time. 4.14 right now in the US benchmark 10-year, largely unchanged on that 10-year, 4.14. You did hear from Chris Waller yesterday on the dovish side, making the case for further rate cuts from the Fed. 1.33 then on the pound, largely unchanged from yesterday. Gold at $4,331 per troy ounce, a little softer on the yellow metal by around 0.2%. And Brent back above $60 a barrel, up 0.8% so far in the session. Let's cross over right now to Winnie Su, standing by in Tokyo with a check on the Asian markets, where the selling is there and it's quite pronounced in Korea and Japan.
Yeah, morning, Tom. Like you said, it's still Asian stocks under a bit of a pressure today on those concerns around AI investment and the expensive valuation. And we're looking at MSCI Asia here down about 0.4%, which is taking it to its lowest level in about 3 weeks. Leading declines here are the technology shares, and we've got Kospi also under pressure. But HS Tech here down about 1.5%, and we're less than 1% away from entering that bear territory. And speaking of just the overall weakness of the Chinese equities, we flip the board and take a look at how it has really been diverging away from that strength of the Chinese currency. You can see here that throughout the big chunk of this year, it has really been both the currency and the stocks moving upwards hand in hand. But recently, in the past few weeks, a bit of a divergence here. On one hand, you have that strength of the yuan coming on the back of the PBOC's stronger fixing, and the government potentially allowing further appreciation of the yuan to support the economy. On the other hand, you've got that weakness in stocks still weighed by these economic prints that have been coming below expectation, and hence a bit more concerns around the profitability and the growth for these Chinese companies. However, we also want to take a look at what's going on in the Japanese market, because we are just one day ahead of that Bank of Japan's rate decision. For now, we are expecting a rate hike tomorrow, but we're also very closely watching a potential risk when it comes to some dovishness in terms of the messaging, and hence a little bit of a pressure here with the Japanese stocks, and just a slightly weakening Japanese yen here also under a bit of a pressure, but still around that 156 level. Now, for the yields, we are still getting close to that 2% level, as concerns around the big fiscal budget for next year still weighs on sentiment. Back to you, Tom.
When you see in Tokyo, yes, the countdown to the BOJ's decision, of course, on Friday. Winnie, thank you. Let's get to the tech story right now and the drag that we saw across US equities yesterday. Oracle leading that tech share story lower on Wall Street then after it revealed that long-time partner Blue Owl Capital is not involved in financing for its data center in Michigan. Blue Owl then pulling out. That was according to reporting from the Financial Times. Let's bring in Bloomberg's Valerie Teitel right now. Why such a big move then around the Blue Owl Capital story? It's just one partner in terms of building out this data center in Michigan, but the moves were sharp and pronounced.
Yeah, I think there was a panic moment in the market yesterday where this news around Blue Owl not being involved in this big project, is that akin to essentially a bank getting a credit line pulled? Given how big Blue Owl has been in some of its financing projects of late, if it's not involved in this one, does it say something about its confidence in Oracle's build out and its business plan to, I guess, service these large clients, OpenAI, and all the debt financing that it needs to get behind that? So that was kind of the panic in the market yesterday. Obviously, we know that this next stage of the AI trade is going to be heavily involved in financing, mostly on the debt side. Are there going to be any road bumps to these AI companies getting that debt extended to them? And perhaps yesterday was the first glimpse of a market reaction to perhaps one small road bump in that build out. Now, again, this is just showing us how nervous the tape is really on AI, on this infrastructure build out. The month of December has really seen a big shift away from the mega cap tech into more value kind of names, that kind of reassessment of the U.S. equity position. A lot of that has gotten, I guess, consensus positioning really offside. So I feel like it's been a painful December, at least for some equity investors out there. The air keeps coming out of this Oracle trade. Thankfully, however, Micron shares after the bell did react positively to the guidance beat from Micron. The shares were up around 8% in after hours trade. This is the U.S.'s largest maker of memory chips. So in fact, them boosting their guidance for next year is still kind of telling us these AI products, that demand is still outstripping supply. So it has stabilized NASDAQ futures overnight, but it does seem like a bumpy road ahead for the AI trade.
Yeah, and executives at Micron are kind of apologizing to customers and clients, saying we would love to be able to deliver to you, but on that point, in terms of meeting that demand, the supply isn't there, and they're building at pace to try and meet that. So it was a challenge session. It was a rough session on Wall Street yesterday. Does the inflation data we get out of the U.S. later today stabilize the markets? What are you going to be looking for?
Well, look, if it shows us that this goods inflation peak is behind us, I think that could do a lot to stabilize the equity market, because that could open the door to more Fed cuts in 2026. Bloomberg Economics actually thinks that this could really be the report that could give markets confidence that this peak in goods inflation is coming and coming soon. Powell said in the press conference last week he expects goods inflation to peak in the first quarter of 2026. This is really the big theme of next year. Is tariff-induced inflation ahead of us, or is it behind us? And can we confidently price in inflation going back to target next year?
Any decisions, any surprises from the ECB today?
I think it's going to be very interesting how Lagarde confronts questions about the market pricing in hikes. Meanwhile, their staff forecasts are showing inflation below target for the next 2 years. 2026 and 2027 show currently that in their staff forecast that inflation is below 2%, and the market does expect them to downgrade inflation even further today. So kind of managing that message of, again, the more hawkish members of the ECB Governing Council talking about hikes. Meanwhile, they're below 2% on their forecast for 2027 and 2028.
Valerie Teitel, thank you very much indeed. A great setup ahead of the BOE and the ECB in the markets, of course, reopening stateside with that focus on the tech story. Meanwhile, the Bank of England then is expected to deliver a pre-Christmas interest rate cut today as focus shifts from inflation towards the UK's struggling economy and jobs market. Let's bring in Bloomberg's Ben Ram, cross-asset strategist for Bloomberg Markets Live. Ben, how are markets positioning ahead of the BOE decision and views into 2026?
Morning, Tom. I think that the markets are well positioned for Santa to come early. I think that we heard from. We saw Governor Andrew Bailey holding for against a rate cut last month. He is likely to plumb for a rate cut this month. Why do we say that? Because I think that inflation has softened considerably and more at 3.2% now, the headline inflation. It would allow the BOE the all-important room for them to cut rates and yet keep the real interest rate positive, the real policy interest rate positive. That's important because you don't want it to go negative. at a time when inflation is already above target. So that is a crucial metric that is going to guide Bailey to cut rates. The crucial question for markets will be how many more policymakers vote for a rate cut. Of course, it's not a given that they will cut rates today, but assuming that they do, what will be the margin of rate cuts? And I think that if we get Lombardi and Catherine Mann also plumping for a rate cut, that will be a very dovish signal for the markets, and the markets will run with that idea.
OK, is how many hawks cross the line, potentially, in that vote decision later today at the BOE. Bloomberg's Venram, cross-asset strategy for Bloomberg Markets Live with that setup. Ven, thank you very much. To a major corporate story right now. Change at the top at BP, tapping the chief executive of Australia's Woodside Energy to be its new CEO. Meg O'Neill will become Big Oil's first female leader. Shares of Woodside fell on news of O'Neill's departure. Let's get more from Bloomberg's managing editor for climate and ESG, David Stringer. Tell us then, David, about what we know about Meg O'Neill and what she's achieved at Woodside.
Morning. Well, yeah, Meg O'Neill may be an unfamiliar name to people in Europe, to many in the market in London and those around BP, but she's an incredibly well-known figure in Asia and particularly in Australia. Now, a really experienced veteran fossil fuels executive, 20 plus years at Exxon, and a real focus on engineering and operations. She became the CEO of Woodside, Australia's biggest oil and gas company, in 2021, and since then her tenure's really been marked by, operational excellence and ambition. She led a multi-billion acquisition of oil and gas assets from BHP. She even launched a pretty audacious attempt to acquire the biggest Australian rival, ultimately walking away when the deal didn't represent value. But what we've seen is that combination of a really steady hand, somewhat ambitious, and also a really trenchant defender of the role of fossil fuels, consistently talking about the fact that oil, and particularly natural gas, in her view, likely to be needed for many, many decades to come.
OK, in the face of the climate crisis, of course. What is going to be top of her in tray then, David, when she takes the helm at BP?
Yeah, quite well. I mean, I know the announcement itself may have been something of a surprise, but I think as investors and others look at Meg O'Neill's track record, they'll see the logic here for BP. If this is a company that is aiming to really reset strategy, to accelerate those plans to return to its roots, to get back a focus on natural gas, on oil, having sort of stepped away from that pivot under Bernard Looney towards renewables, you can see why Meg O'Neill is appealing. As I said, she's very focused on the role of fossil fuels, and she's proven herself very good at getting more out of existing assets and really thinking carefully about where to add new assets. She's also someone who's done a lot in a short space of time as the Woodside CEO, and if BP and investors like Elliott, if their complaint is that strategy isn't moving fast enough, then perhaps that's why O'Neill is a good fit.
David Stringer, Bloomberg's managing editor for climate and ESG, on the new incoming CEO at BP. David, thank you. Here's what else to think about today then. It's not just the BOE and the ECB. At 8:30 a.m. UK time, the Riksbank will be coming through with their decision over in Sweden, and at 9 a.m. UK time, it's the Norges Bank, of course, in Norway. So two other central banks in focus alongside the BOE and ECB. And it is BOE rate decision day, of course, 12 p.m. UK time. Markets almost 100% priced for that 25 basis point cut. And to what extent the votes diverge will, of course, be interesting. And at 1:15 p.m. then the ECB rate decision, expected to keep rates on hold. And at 1:30 p.m, we will get that US inflation print. Delayed, of course, because of the government shutdown, but another gauge as we think about the Fed's next steps into 2026. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBgo on the terminal, and the new CEO, the new incoming CEO of BP, and a profile of her experience and what to expect as she plans to take the reins at BP is clearly part of the analysis and focus today. Coming up, we're going to switch focus and hear from President Trump. He's been spreading, at least trying to spread, some Christmas cheer as he awards American troops with a special holiday payment. More details on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Trump has announced a special holiday warrior dividend payment for troops. In a primetime address, he blamed the previous administration for persistent economic anxieties, saying he is bringing down high prices.
Here at home, we're bringing our economy back from the brink of ruin. The last administration and their allies in Congress looted our Treasury for trillions of dollars, driving up prices and everything at levels never seen before. I am bringing those high prices down and bringing them down very fast.
OK, let's bring in Bloomberg's senior editor, Brian Fowler. Brian, what more do we know about these special payments to troops? How are they going to be funded? What is the rationale? And what else stood out to you from this primetime Trump speech?
Good morning, Tom. Yeah, so let's first just get the backdrop in there. And this comes after we've seen in recent months polls showing that there's increasing discontent among Americans with regards to the economy, specifically sticky inflation and weakness in the labor market. Earlier this week, of course, we had data showing that the jobless rate rose in November to the highest in 4 years. So Trump's main goal here was to assure Americans that everything's going in the right direction and the economy is poised for the golden age that he's been promising since he took office. And in making his claims, he was, as is often the case, you could say, a little creative with the facts. He said that when he took over, inflation was the worst in 48 years. In fact, inflation in January was 3%, and that's exactly where it was in September. And data we'll get in a couple of hours are expected to show that November inflation is also 3%. So that there's not a lot of change there. He also claimed to have dropped pharmaceutical prices by between 400 and 600%, which of course is mathematically impossible, so make of that what you will. But one thing that is grounded in reality is these checks, real cash in hand. So he promised these checks worth $1,776, a special number meant to commemorate 250 years since the U.S. became independent. He called them his warrior dividends, and they'll go to 1.4 million active military personnel. I think those payments they kind of reflect his recognition that there's been some damage to the military in terms of morale, partly to do with what it's been doing in the Caribbean in recent months. And so I think that these payments are meant to sort of boost morale and probably to ensure loyalty for whatever's next in his campaign.
Yeah, well, to your point, of course, these checks will be going to service personnel, many of whom, or at least a significant number, are kind of sitting off the coast of Venezuela. And yet Venezuela was not mentioned in the speech.
Yeah, it's interesting because just 24 hours before this speech, he was very active on social media declaring that he was going to blockade these sanctioned oil tankers. And he was demanding that Venezuela reverse nationalization of U.S. assets that occurred in the 70s and the 1990s. And he also said that the U.S. should have access to the massive oil reserves. None of that came up during his speech. And I think that shows his recognition that at this point, foreign affairs is not really front and center for most Americans. They're much more concerned about how they're going to make it through the holidays, how they're going to pay for presents and food and also health care early next year. So we didn't get Venezuela. The closest thing we got was Trump touting his record as a peacemaker. He said he had solved 8 wars or so, and then also talking about the border. And he said he had fixed that problem, no more illegal immigration since he took over. And otherwise, he really wanted to keep the focus on just assuring Americans that everything is poised for glory going into the new year.
OK, Bloomberg senior editor Brian Fowler breaking down that primetime speech by President Trump yesterday for us. Brian, thank you. We're going to switch focus because coming up after the break, European leaders, meanwhile, are seeking to finalise a deal on unlocking frozen Russian assets to help Ukraine. We're going to be live in Brussels for more details later in the programme. Have they made progress? This is Bloomberg. Robinhood is moving further into the predictions market, rolling out more options for wagers on sports. Chief Executive Vlad Tenev spoke to Bloomberg about how he sees the space evolving.
there's a tremendous amount of value in the diversity and variety of contracts. And what we're actually seeing, similar to trading, a lot of people that actually have strategies. So it's not, it's not as much of like, I'm buying a team because I'm a fan of it, but there's systematic trading and people are analyzing these things and they have strategies around it. And it goes beyond sports. You guys were mentioning the Warner Brothers merger situation. If you notice, the question on everyone's mind is what's likely going to happen to Warner Brothers? Who's going to acquire the company? Is it going to be Netflix or Paramount Skydance or neither of the above? And right now, we look at the stock prices, right? And we try to reverse engineer what's happening with the situation. Well, there's a prediction market that we illustrated on the platform. And you can see last night it was showing 55% chance Paramount would actually be the ultimate acquirer. This morning it went to 75% Netflix. So even in terms of what value they provide to the news, it can be incredibly powerful and more direct to zero in on the results of that specific outcome. And now I'm not saying everyone should be trading prediction markets. Like any derivatives market, I think people have to make sure it's right for them. But I think they're resonating quite strongly with our active traders. And also, I think they're a great way for other folks who may be interested in trading to learn about the new asset class.
It's an incredibly competitive space, Vlad. I don't need to tell you that. And you have, companies and people being minted billionaires as a result of the competitive space right now. I'm wondering about the dynamics and how you view the competitive dynamics and whether you have an edge after acquiring LedgerX. Talk about that a little bit.
Yeah, I mean, right now, we're the largest broker in the space. And actually, the brokerage landscape is not very competitive. I mean, we're pretty much the only game in town. In terms of the exchanges offering prediction market services, I think there's a big argument to be made for this to be an increasingly institutional business over time. In the same way that crypto markets started off being exclusively retail and have sort of like built up institutional adoption over time, I think you can make a perhaps even stronger argument that the same is going to happen with prediction market event contracts.
The CEO of Robinhood, Vlad Tenev. Now, the US, meanwhile, has approved a package of arms sales to Taiwan worth up to $11 billion, in a move likely to draw a sharp response from Beijing. The deal covers a broad range of equipment, including missiles, drones and artillery systems. It marks one of Washington's most significant efforts in recent years to bolster Taiwan's military capabilities. And the surviving suspect in Sunday's Bondi Beach shooting has been charged with 59 offences, including murder and terrorism. 24-year-old Naveed Akram remains under police guard in hospital. Australia is now planning new laws against hate speech in the wake of the attack. This as Australian Prime Minister Anthony Albanese conceded his government could have done more before the tragedy. Coming up, we will set you up for today's rate decisions by the Bank of England and the European Central Bank. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Thursday. These are the stories that set your agenda. Stocks in Asia follow Wall Street lower on renewed concerns over tech valuations. Traders now turn their attention to today's US inflation data. Central bank decision day across Europe. The Bank of England set to resume rate cuts, with the ECB expected to hold. Plus, big oil gets its first female CEO as BP appoints Woodside's Meg O'Neill. Let's get to the markets then. It was a brutal day for US stocks yesterday, particularly on the Nasdaq 100, with losses of almost 2% and the S&P 500 down around 1% by the end of the close, and it was tech that was the leading sell-off, with Nvidia down around 4% and Oracle falling almost 5%. Today, European futures unchanged, and European equity markets have been searching desperately for direction because you were flat by the close in Europe yesterday as well. We'll see if the ECB has a factor and plays a role in that. Not expected to change rates, of course, just today, so possibly less likely. FTSE 100 futures, though, in focus. They gained yesterday. FTSE 100 UK stocks gained on bets of BOE easing. You're today a little lower, called a little lower by about 0.1%. S&P futures then, after the losses of yesterday, pointing to modest gains of 0.1%. And Nasdaq 100 futures looking to add just 81 points. Let's flip the board and have a look what's happening cross-asset. You are seeing a modest move into US Treasuries. Yields down 1 basis point on the benchmark 10-year, yielding 4.14. The pound, of course, in focus as we lead up to the BOE rate decision, 133 right now, a little softer by 0.1%. Gold above and holding above 4,300. Brent gaining 0.9%. Oil prices higher and back above $60 a barrel on Brent. So attention is, of course, focused on the Bank of England decision later today. The case for a UK rate cut is looking ever more persuasive, with traders and economists expecting the central bank to reduce its benchmark rate by 0.25 point to 3.75% from 4% now. Let's bring in Camille de Courcelles, head of developed markets, rate strategy and Europe economics at BNP Paribas Markets 360. Camille, thank you for joining us bright and early. Your views on the BOE, fully expected to cut today. What is 2026 looking like for the Bank of England? Do they have the space to go further than markets are expecting?
So that's exactly the focus indeed on the guidance. Will there be further easing in the statement? And we think that should still remain in place. So on the one hand, we would expect a bit of a, let's say, a slight change in the guidance to reflect the fact that the BOE is now moving closer to neutral. And so, as any central banks, you would expect the bank to reset the bar for further cuts higher. That's fairly normal. But we think that the bias should overall remain for further cuts, and we expect one more in Q1. Because if you look at the data, it has been weaker. Yesterday, inflation data, big downside surprise. Food prices, we think, were pretty much 80 basis points below the BOE's estimate, which is quite relevant for consumer price expectations.
Yeah.
And labor data, GDP data, everything pointing towards a slowing economy.
OK, so they cut today. They cut again in the first quarter of 2026. Where do UK rates end up by the end of next year on your current assessment?
So we have 350, so just one more cut. But we think that the BOE will have more room to go in 2027.
Oh, interesting. OK. In the gilt markets, then, there's been a big rally in the 2-year. The 10-year has moved. Yields are down about 10 basis points, so there's been a bit of money moving into the 10-year as well, but not as much as the front end. But you're seeing a divergence in terms of the performance of a UK sovereign debt and those of their European counterparts.
It has been a notable divergence over the past 2 weeks, indeed. You know, it's been quite notable, especially when we had all this hawkish repricing at the front end in various regions, emanating from, like, Australia, for example. But UK rates remained a lot more resilient, especially compared to their European counterparts. And we expect that trend will continue in 2026. So we would remain long UK gilts.
OK, you remain long UK gilts, and the performance has been there, and it's set to continue in 2026. Let's briefly touch on the ECB then. Or maybe the question should be, what is going to have most impact on the sovereign debt of European nations? Is it going to be the ECB, or is it spending from Germany? Which one is going to be more impactful?
Spending for Germany, for sure. We don't expect much from the ECB. They will be asked about the possibility for hikes in 2026, considering the big shift that we have seen in market pricing. But what will be absolutely more relevant today will be the German 2026 funding outlook indeed. It's very relevant for term premium, for 10 years, 30 years. And, you know, there has been a big focus on the market on this for the whole year. We expect 140 billion of net supply for next year. We think that we are probably at the top of the range. We think that the range of estimate is probably between 120 and 140. But if they confirm this sort of amount, let's say sort of magnitude, we should still see an ongoing repricing of term premium higher that would lead overall euro rates higher in 2026. So
okay,
again,
so that
a big decoupling between euro and UK rates.
And that's on the spend, potentially 140 billion in terms of debt issuance from Germany, just from Germany, in 2026, and debt still has to reprice that. Yields up across Europe on that
supply,
story.
and yes, that will still have to be reflecting this.
Okay. On the inflation, you touched on the fact that they're going to be quizzed, or at least the focus will be on whether or not the ECB is even considering a potential hike in 2026. You see inflation re-emerging across Europe, and you describe it as rampant, but in 2027.
Correct. So we've been very early on saying that the next move from the ECB would be a hike, not a cut, but we don't expect it to happen until 2027. We think that the economy will be much stronger next year and the year after, stronger than the ECB expect, stronger than the consensus expect. And so by 2027, it should start to lead to inflationary pressure.
Okay, very interesting. Camille de Cossel, thank you very much indeed. Head of Developed Markets, Rate Strategy and Europe Economics at BNP Paribas Markets 360 on that continuing divergence between European sovereign debt with yields up. That is the view for 2026 versus further gains to come for UK gilts. And we'll see how the BOE and ECB decisions later today tie into that view, whether they support or push back on that view from Camille de Cossel. Meanwhile, European Union leaders will gather in Brussels today for a make-or-break summit. Leaders will try to overcome staunch resistance to both a funding plan for Ukraine and a significant trade deal with South America. For more, let's bring in Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what happens if they can't agree on these Russian assets?
The truth is they don't really have a path forward for financing Ukraine without using the Russian assets. There have been some discussions about potentially bilateral funding from member states. But, Tom, I don't need to tell you about how stretched many of these budgets are across Europe. It's bringing down the French government, it feels, every 5 minutes. So there isn't really the money from these individual budgets. There is also the possibility, Tom, of using joint debt. But joint debt is probably the only thing on the planet that is more contentious than dealing with these frozen Russian assets. For the Europeans going into this meeting, I think it's really fair to say it's make or break, it's do or die on two of those main issues. Whether or not they're going to figure out what to do with these Russian assets, if they're able to get their act together and put forward that 90 billion euro loan to the Ukrainians to fund 2/3 of their budgets for the next 2 years, or if they're not going to. If these little disputes and these disagreements are basically going to stand in the way of getting a collective European approach of how to deal with this, I think would add to yet another humiliation for the Europeans in a year rich of humiliations in terms of being able to assert themselves on the global stage. And I think Friedrich Merz really set it out the most. He set it out the stakes. He said, let's not kid ourselves. If we fail to do this, the EU's ability to act will be severely damaged for years to come. We will demonstrate to the world that at this crucial moment in our history, we are incapable of standing together and acting to defend our own political order on this continent. Those are the words from the Chancellor of Germany, who has been more and more outspoken on these issues of the Russian assets and a number of other issues, saying that he will get it over the line in the summit. But I got to say, Tom, going into the summit in the next couple of hours, we do not know which way this is going to go.
Wow. Yeah, someone described it as 50-50, but he's really laying out the stakes there, isn't he, with that statement, the Chancellor of Germany. Meanwhile, there's this trade deal with South America, and it seems the French are potentially the roadblock there.
Yeah, the French and potentially the Italians. And we should say, Tom, this is a trade deal that is 25 years in the making. So again, trying to put onto the sort of stage the scale of these sort of issues. This is what the Europeans have been trying to get through for 25 years. This would make a market of about 800 million people between Latin America and the European Union. And it, of course, Tom, is so important right now, not just because the economy in Europe is doing so poorly, but also because of the trade war with the United States. The Europeans are trying to find ways to diversify their markets away from the United States. Mercosur, this trade deal, is one of the ways that they see that they're going to be able to do that. The stakes have risen once again by the president of Brazil, who says that basically if we don't get this agreement done now, this is supposed to be signed on Saturday, Brazil is not going to pursue this trade deal during his presidency. So he set his own sort of deadline there. So 25 years in the making. It was supposed to be signed on Saturday. The French have thrown up some objections. The Italians have thrown up some objections. We should say, Tom, that in addition to having all of the European leaders here in Brussels today, yesterday. We have a great deal of tractors and farmers protesting on the streets, protesting exactly this deal. But again, once more, Tom, this on Ukrainian funding and on Mercosur. This is a question about the Europeans being able to plot out a course for their own agency across the world, and failure to do so will once again demonstrate to the world and potentially to the Trump administration one of the views that he has held and made very clear over the last couple of days and weeks, that Europe is weak, it is declining, and it is not functional.
OK, Bloomberg's chief Europe correspondent Oliver Crook on the stakes ahead then for European leaders on a crucial day and a crucial summit. And Ollie will be speaking exclusively with the EU's High Representative for Foreign Affairs, Kaja Kallas. So make sure you tune in and stay tuned for that conversation. That's at 7:45 a.m. London time today. Coming up, cybersecurity firm Exein raises 100 million euros in new funding. We're going to find out what it plans to do with the money from the founder and CEO. That exclusive conversation is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the cybersecurity firm Exein has raised 100 million euros in additional funding, bringing the total raised this year to 170 million euros. It's been a year of hyper growth for the Italian startup, backed by JP Morgan, with its valuation nearly doubling since its Series C fundraise in July. With me now for an exclusive conversation is the founder and CEO, Gianni Cuozzo. Gianni, thank you for coming to the studio. Congratulations on the raise. So you're raising at pace, you're seeing a lot of growth. How are you putting this money to work?
Well, I mean, this money will be used to fuel our M&A expansion across various segments that we are aiming for as a company. As you know, right now we work mostly with the manufacturers, while with this new strategy we are aiming also to go to consumer side cybersecurity and the user side cybersecurity. So building the first platform that actually connects manufacturer and the users of technologies.
OK, and let's talk about how you differentiate yourself in the cybersecurity space. So you describe yourselves as the world's digital immune system. What does that mean in practice?
In practice means that basically our runtime security runs inside the systems. So it's not an external security operator or an agent. Everything is happening in the device. So we, in our philosophy and in our view of security, we want cybersecurity to be decentralized in every single system. So basically, your smart TV, your connected system, your car can share threat intelligence between themselves. And right now, we have the largest fleet of devices across any vendors. We have 1.5 billion devices running our technology worldwide. 1.5 billion
devices running your tech worldwide. Yeah. How would you characterize? You've worked in cybersecurity. You've worked very close to defense and NATO for a number of years through your career. Yeah. How would you characterize today the cybersecurity risk?
Well, the cybersecurity risk today is, of course, being affected by the geopolitical condition. As the Danny Bonta Institute actually underlined, embedded security and embedded system of firmware exploitation will be a thing. Because, of course, when you attack a firmware of device, you actually cause physical damage. So I think what we will see in the future will be a more increasing attacks on a firmware surface and on device surface that actually will lead to physical damage to the systems. As until now, we see mostly attacks on service and web technology or web services. In the future, we will see more and more attacks happen on infrastructure and the physical system. And that's why Exein is putting herself to be the first line of defense between what happens in the digital world and what happens in the physical world.
OK, so that's an important adjustment and change in terms of the attacks and the damage that they cause. Who is behind the kind of attacks that you are protecting against?
Well, of course, we see a lot of state actor, of course, because they are the most well-funded, and of course, they don't have a time limit in which they can operate. Also, we're starting to see a lot of criminal activities, because criminal activities is shifting from stealing all your data to hold your device in a ransom. So basically, imagine you are a factory, somebody will hack the firmware of your CNC machine and ask you for money if you want to resume your production line. And of course, this is causing a lot of economical damage, and also, you know, the higher the economical damage, the higher is the ransom that somebody can ask you.
Okay, so the criminals and then the state actors, and when we think of state actors, presumably Russia, China, North Korea.
And Iran, of course.
And Iran. So those four, which one is the most dangerous at this point?
Well, it's very complex to give an attribution, also because most of those states work together.
Most of them work together.
Yeah.
Okay. What's happening with AI? Is AI helping the bad guys more than it's helping the good guys?
Well, AI is helping both, which is like nuclear power. You know, nuclear power, somebody uses it for doing nuclear weapons, somebody is doing for doing clean energy. AI is pretty much the same. You know, it's used by both sides. What we are seeing right now is that the rise of AI-generated attacks, and you know, we are starting to see also the first autonomous attack systems. So basically, the AI that generates attack directly on the device, and this is very a shift because firmware exploitation in the past used to be a very human-intensive work because you have to study how the device was compiled, what kind of characteristic the device had. Right now, you can automatize the entire attack chain, which will lead to a higher numbers of attack, also very complex attack that before required a lot of study and, of course, a lot of human work.
So we're talking about autonomous AI attack agents.
Attack agents, devices, directly to the device.
So what are you doing to use AI to defend against those kind of attacks?
Well, we use AI mostly to analyze how some device should be running. You know, we are working on devices that tend to be very recursive. So, for instance, a smart TV it's doing the same stuff all over again, same as a light in an airport and stuff like this. So we use AI to understand the pattern of execution of those devices. So to really understand how those devices are executing and try to apply a zero trust policy in whatever the device should not do. So for us, AI is both an agent and both help us to understand what device is supposed to do.
Let me get back to the business and the valuation story. Yeah. You've said that the valuation has your team said the valuation's nearly doubled in the 5 months between your last raise in July and now. Yeah. What is the valuation?
Well, we will not share publicly, but
you can share it here, just between us.
No, of course, we are not alone, but maybe next time we will have some bigger announcement also.
Well, give me some sense in terms of the growth metrics then, now and into 2026.
Yes, so we growing from 2024 to 2025, we grow 5 times. In terms of revenue and the contracted
That's 5x on revenue.
Yeah, 5x on revenue, and we are aiming at least to do 3 times next year. Of course, you know, we will. You cannot do 5 times every year. This was an exceptional year this year, and also because we are becoming bigger. But I think the amount of devices that are being connected right now is really staggering, and actually we've seen more and more devices getting hit by attacks, and also manufacturing takes the responsibility of those attacks and thinking that they should be their part, and Exein is helping them to do their part on providing technology to ship better and safer devices directly to the market.
Gianni, thank you very much indeed.
Thank you so much.
Really interesting, fascinating. Congratulations on the raise. Gianni Corzo, founder and CEO of Exein, on the back of that most recent €100 million raise, 170 in total just this year alone. Now, some other stories making the news this Thursday. In the defence space, Rheinmetall has boosted its outlook for the year and announced plans to sell its remaining civil businesses. The moves highlight how surging demand for defence in Europe is pulling the company deeper into its core military markets. And Bloomberg understands the White House is set to announce drug pricing deals with pharmaceutical heavyweights Novartis and Roche as soon as Friday, easing trade tensions with Switzerland. Pfizer, AstraZeneca and other companies have struck deals with the Trump administration in recent months, agreeing to lower prices in certain instances in return for tariff relief. We are told other drug makers could also be included in tomorrow's announcement. And the FT is reporting that Elliott Management is preparing a multi-billion-pound flotation of booksellers Barnes & Noble and Waterstones. The paper says the fund manager has spoken to potential advisors about an IPO and could appoint investment banks early next year. The report says London was likely to be favoured over New York, given the steady income being generated by the businesses, which could be attractive to yield-seeking UK funds. There's a lot more coming up. Stay with us. This is Bloomberg.
For the first time in years, wages are rising much faster than inflation. Remember that the wages, just look at it. Wages are going up much faster than inflation. How big is that? Very importantly, there are more people working today than at any time in American history.
The US president addressing the nation then a few hours in that prime time address, a few hours ago, I should say. So talking of wages and inflation, let's give you a preview in terms of the CPI that drops out of the US later today. For November, month on month, we don't have that number because, of course, we don't have the print for October. But year on year, we get the forecast expected to increase 3.1%, so slightly above the September print, which is the most recent print that we had. That's on the headline basis. On core, you're expecting to see a number of 3%. And of course, all this is consequential when you think about how the Fed reacts, with increasingly FOMC officials focusing on the labour market, but the data there has been very mixed. So will we get some clarity in terms of further downward trajectory for inflation, or is there stickiness that could derail those two bets from traders for the Fed next year on further rates lower? The dot plots, of course, the forecast from the FOMC most recently forecasting just one additional cut next year. Let's flip the board and have a look at what's happening, talking of central banks, in terms of the preview and the run-up to the BOE, almost fully expected to cut then to 3.75 from 4% right now. And the BOE is the outlier versus the EU, of course, in terms of rates being at 2% for the ECB. The ECB is expected to stay on hold. We have seen, of course, inflation that came through yesterday coming in sharply below the estimates, and some work being done by the budget, is the estimates at least, in terms of pushing costs down in areas like energy and transport. So that could give more of a glide path to the BOE in terms of rates going forward in 2026. Markets currently pricing in one other cut beyond today by the first quarter of 2026. Let's briefly touch in what's happening with the tech bubble concerns, because those came back to the surface yesterday, with the Nasdaq 100 ending up with almost a 2% drop. You saw Nvidia down about 4%. You saw Oracle off as well. Talking of Oracle, the yellow line showing the price higher on CDS, credit default swaps, of course. That will be concerning for a company that has made commitments of almost $250 billion in terms of leasing of data centers, far above any of their competitors. So the concern, and Oracle, as we hear from the FT, that Blue Owl is not going to be part of a data center build-out in Michigan. So the valuation story remains, and Oracle is front and center in terms of potentially a canary in the coal mine. We've got an exclusive conversation with the Kaja Kallas of the EU coming up. The opening trade is next. Stay with us. This is Bloomberg.